Jim, let's talk about oil because we have moved here. We're kind of seemingly staying above this $50 a barrel mark. But is it about the oil, or should we be focused on where we're getting the oil, the people getting the oil and getting it out of the ground?
I think a lot of times when you have theories, you tend to get blindsided by facts. The big theory is if the dollar's getting weaker, then oil's going up.
And when the market goes up, oil's been going up. So we've been...
You really have to take each of these commodities on their own. So I bring on last night Herbjorn Hansen, who is the CEO of the #1 oil tanker company. And where are the oil tankers headed? They're headed to China. So you say, okay, well, look, the demand is there. It's from China. So yes,
because they're buying lots and lots of cars, they're building highways.
Exactly.
They're us in the 50s.
Right. They are consumer driven. And when you sit there and you say, okay, listen, the reason oil's up artificially, if the dollar goes down, oil goes down. Well, that just doesn't fit with the facts. Now, there's a lot of what I regard as theoretical versus empirical decisions that are made in the market. There are people who don't do homework, but they theorize. And that's fine.
Is that the easy way? The quick way?
I think it is.
Okay.
And it's very headline grabbing, so therefore the editors grab it and the writers grab it and the reporters grab it. We'll say, okay, well, the reason why this is going up is because of this. Now, what I like to do is say, okay, everything's driven by supply and demand in my world.
Okay.
So the supply of oil, I think, is constrained. It's constrained because OPEC's cut back, and we're not drilling more than we used to. We're drilling fewer, so we're not spudding. There's less.
So let's go all the way to the beginning, getting it out of the ground.
Right. And the demand side, because of China, has actually picked up, and because of gasoline going down to $2, there's demand. Now, obviously, the refiners aren't making what they were, because that's why Valero was the only stock yesterday at one point in the S&P 500 that was down. So I tend to look at things as like, okay, listen, your theory about the dollar, that could explain, say, 36 to 40. Okay, maybe $4 up.
Okay.
But when you get to 50, the equation changes. At 50, BP becomes a huge buy because that's where the dividend is safe. So instead of being 8%, it should be 6%. At 50, you can make a case that Chevron is going to make a ton of money because they have a huge amount of oil coming on stream this year from things that they were drilling.
And you've got BP and you've got Chevron in Action Alerts Plus.
But at 50, you're not going to get a revitalization of the rig count in America because that's dependent upon natural gas, which is at 4. So, once you've decided that it's demand-driven and not dollar-driven, and once you've decided that it's that the supply is constrained, then you can make a series of responsible equity choices. And I use the word responsible because I think that you have to be very careful. If you just invest on theory, you're going to be blindsided by fact.
What is the magic number that gets the drillers going?
I think it's 70.
Okay.
And I think it's 6 for natural gas and 70 for oil.
Okay, we'll keep our eye on that.
That's where you get the turn.
Keep our eye on that number.